Hey, good morning, guys. Welcome to Market Mondays. Hopefully, you guys had a great weekend. Today, we're going to go into a little bit of market stuff, but for the most part, I get a lot of these questions recently in regards to what's going to happen to the real estate market when mortgage rates come down. So that's going to be the topic of discussion today because it is an important factor to what's expected to happen this year and into what we're going to be seeing it impacting how real estate's going to go. Of course, we got to start with our dad joke. So this morning goes 5 ants rented an apartment with another 5 ants. Now they have 10 ants. 10 ants. 10 ants. All right, so getting right into it. So over the last week, rates have basically over the last month, rates had gone up in the month of February from where they were in January. So it's going to be an interesting rest of the year in regards to what's going to end up happening. But right now, the forecast is still expected to see rates to continue to go down. And with that being on the horizon, and by the end of the year, rates expected to be in the 5 range. What is going to happen to the real estate market? So here's my forecast with that. It's all about simple supply and demand. So if we look at just last year in 2023 and even at the end of 2022, last half of 2022, rates skyrocketed and they basically doubled over the course of 6 months and then reached to as high as maybe 8.5. And over that fast amount of time, a lot of buyers got priced out. So that caused a lot of buyers to the amount of buyers to dwindle down to a really, really low number. At the same time, since basically 2020, maybe 2019, the inventory in the real estate market has been relatively low. And to give you guys a basic idea, the balanced market looks about 6 months of supply. Well, we haven't been in that for a long time, for at least the last couple of years. So we've been in a low inventory market for a long time. And we had been in a low inventory market even when rates got higher. So nothing with inventory really changed. The status of inventory basically stayed the same. Now, the other consideration with that is sellers didn't want to sell their houses because if they were to buy a house, they would be also in that higher rate. So a lot of sellers also pulled back from potentially selling their house. So that kind of helped equal out a little bit, but for the most part, we're still in a low inventory market. There's still not enough homes being built to kind of replenish the amount of homes that are being taken off the market, as well as the new households are being formed because people had a lot of kids since the 70s. So one of the things that we have to consider, right? Now, with the expectation of rates going down, there's going to be a lot more buyers than there will be sellers. A lot more. Right now, those who are actively buying are a lot less. But when rates go down, more and more people will continue to enter the housing market to buy a house. Those sell, those wanting to buy for the first time. So what's going to end up happening is that the amount of inventory is in relation to the amount of buyers isn't going to change from a low inventory market. It's still relatively low inventory. So what's going to end up happening is that there's going to be a larger influx of buyers coming in, which is going to cause more competition. Right? More competition will cause home prices to continue to go up. Now, I don't think we'll see what we saw in 2022, if in the Washington state market, where home prices were being bid up almost more than 20% from what their list price was. But it's going to be a significant enough movement to show that we're going to see home prices go up when rates get a lot better. And I think they're saying every 1% allows for another few hundred thousand more home buyers into the market. So when it comes to that, what's going to end up happening with rates go down, home prices go up, people are going to be buying more expensive homes than they would be today. Now, buying right now is kind of a weird, interesting sweet spot because rates are high. We're not going to ignore that. Rates are high. However, what it allows you as a buyer to do is that it allows you to have more negotiating power with the seller, because right now there's not a lot of buyers. A lot more buyers are coming into the market, but for the most part, when there hasn't been a significant movement enough with rates for people to start coming in. Now, rates have changed a lot, don't get me wrong, since last October, but they still have been around the 6 to 7.5 range on average since the end of 2022. So if you're able to buy a house now, you're going to be ahead of the game, as well as have more negotiating power with like getting a closing cost negotiated, reducing the price down, so on and so forth. Now, waiting for rates to change is a reasonable idea. However, what comes with that is higher home prices. So what's going to end up happening is that if you go wait till rates change, home price is going to be much higher. That's the trade-off. For those who have bought a home before that buyer frenzy, what's going to end up happening is that the buyer frenzy is going to cause your home price to go up. And also, if rates go down enough, you can just refinance. And then you'll get a better payment, house be worth more, double whammy. So that's kind of like my forecast of what's going to end up happening with the real estate market. I've been kind of saying that, I've been kind of alluding this for the last year, and it just depends on when it happens. But this is kind of where we're going to be seeing it. So does it make sense to look at starting to buy a house now? I would say yes. Doesn't mean you have to buy a house. It just means you have to be ready to buy a house. And if something comes up and you're going to be already ready to submit an offer before anyone else is, before that frenzy happens. So, and it's going to take time. So what the other piece of it is, let's say tomorrow rates go down to 5.5 all of a sudden. Well, it's going to take some people time to finally get the news, finally get over whatever objections they personally have created, and then decide to get pre-approved, then buy a house. Whereas if you're already buying a house, if you're already in the buying zone, you're already that further ahead than everyone else. So it's something to consider. And the other thing is that the sellers haven't really reacted to the buyer frenzy yet, because it's going to take maybe a month for everyone to start reacting. It's like, oh, rates are lower, let's go get pre-approved and stuff like that. So and being ahead of the game by any measure is going to help you greatly, even if you're just casually shopping. So, and as home prices and those who are selling are all already also in that same boat, where they're going to be ready to look to sell, and they're also going to be looking to buy as well. So I would say sellers and those who are already shopping are going to have the edge for those who are pre-approved, ready to go. So those are my thoughts. Those are my forecasts. So I want to give you guys a little sneak peek of what the current average mortgage rate is right now. Again, this is a Google generated snapshot of what rates look like. Okay, so this is not what our rates are, but for the most part, it gives you an idea of where rates are at, so that you have an idea of how rates are trending. So as we mentioned before, we did see a pretty decent move in January, where we were, touching the 6.5 range, which was super nice. Now we're back up in the 7.5, basically low to mid sevens. So, and then again, this is generated by Google, so this is the average of all rates. Whatever you guys see out there, it could be just dependent on the lender and how much they're charging for those fees. Anyway, that is all I got for you guys today. Hopefully, give me some feedback on what you guys think as far as what's going to happen with the real estate market. Otherwise, have a great week. Nuke out.